Welcome to Commerce GYAN. Today we have reached the part 11 of our Basics of Accounting series, and that connects us to a very important part of accounting, and that is what we call as depreciation. So, today we are going to learn about this topic in detail, and we are going to learn the types of depreciation. We are going to understand how depreciation is calculated, and also, of course, what is the meaning and importance of depreciation. This term is something which is again a part of our foundation of our accounting. So, depreciation is something which we have to remember for 1 year? No. Up to graduation? No. We have to remember this particular concept for our lifetime. You are a commerce student, if you are a person who is connected with commerce stream in any way and you're working in that particular profession or in a job of that particular type, definitely every now and then you want to come across this particular concept of depreciation. So pay attention carefully till the end of this video to understand everything about depreciation in detail. And also, if you have come to this video directly and you wish to learn more about the basics of accounting, then you can go back to our playlist of basics of accounting, and in that playlist you will get the entire series from 1 to this particular video 11. And of course, if you stay subscribed to this particular channel of Commerce GYAN, you're going to get further updates on learning of accounting, and this can help you in your entire journey of accounting and commerce. So let's proceed and understand the concept of depreciation. So for understanding this concept of depreciation, we are going to take an example. Now, suppose you have a car, an old car, and you want to upgrade it, right? Or you want to use this particular car for some time period, and then after a few years, you want to upgrade it to a new car. What would you do? As a normal person, and to, you can say, understand that you need a provision for buying a new car, what will you do? You are going to keep aside some money from your salary or profits so that you will be able to purchase the new car. Correct? So this is one thing you will focus on. Secondly, if after the 5th year is over, you buy the old car, and after 5 years, I ask you, what is the value of your car now if you want to sell it and buy a new car? You will think for a minute and then say, okay, of course, I've used that car, and now if anybody is not going to pay me the same value as the amount for which I bought the car. So then what? Then I am going to understand on the 5th year that the car value has reduced. Correct? So this is where we have to bring into account the concept of depreciation. So why do we need depreciation? This is the question we need to ask. So the first thing that should come to your mind when it is about depreciation is that every year you know that you're using up that particular asset. And when you're using up that asset, it should be considered as an expenditure. So just as it's mentioned in point number 1 here, consider part expense every year. So we need to consider that every year. And secondly, we need to consider a provision for buying a new asset. Just like I told you that if you want to buy a new car, what will you do? You will keep aside some funds and then use these funds for the purpose of buying the new car. So this is exactly what we need to or we mean by the word provision. Next is, what are the types then of expenses? So before we actually go to the concept of depreciation, we need to understand there are different types of expenses. We have already done this in a little bit, you can say parts and bits, when we did the first part of basics of accounting. But here, since I'm explaining to you the concept of depreciation, it is important that you again revise these types of expenses so that you're more clear on this concept of depreciation. So what are the types of expenses? First one was capital expenditure. Second is your revenue expense. And the third one is your deferred revenue expense. Now, quickly, we are going to understand these three, or first two rather. The third one is not relevant to our discussion. So we'll understand the first two of them, capital and revenue expense, so that we can proceed to the understanding of depreciation with more clarity. So first one is capital expense. What is this capital expenditure? Important thing, you will have money spent on buying of assets. And when you spend money on buying of assets, fixed assets as we call it, It could be tangible like land, like it could be like building, machinery, furniture, cars, fixtures, electrical equipments, and so on. It could be intangible like patents, copyrights, trademarks. So if you're spending money on buying of these fixed assets, then it is called as capital expenditure. Second important thing is whenever you're spending on fixed assets, these assets basically are recorded as not an expenditure but as an asset, right? It doesn't go to your profit and loss account, it goes to your balance sheet. And third important point when we talk of capital expenditure is the expenditure that you make on these assets is going to give you long-term benefits. So this expenditure is something, if I am like buying a machinery, that machinery is not going to be with your business only for 1 year. It's going to be for a long duration over and above the span of 1 year. And that is what we mean by the long term. So this expenditure is going to give you benefits in the long term. So will I put the entire value of furniture or that machinery in this 1 year duration only and say, okay, I've spent money in this year, so that it becomes my expenditure entirely in this year? Will my profits be correct? The answer is no, because this expenditure is not for the current financial year, it is for the upcoming years also, isn't it? So when it is for the upcoming years, I cannot put the entire value in this same financial year. This is according to the accounting period concept, right? So accounting period concept says that we have to take into consideration only expenses that are relevant and related to that financial year. So if I'm buying a furniture which is going to be used by the business for the next 10 years, only 1/10 of that expenditure will be relevant expense for this financial year. So that is what I need to remember. Next, we need to understand how this capital expenditure entry goes. So basically in the journal, what do? You just write the asset name, machinery, furniture, car, vehicles, whatever the case is, will be debit. And secondly, if you have paid for that in cash or bank, then you write it as to cash or to bank. And in case you have not paid it, you probably have to still pay it. You will write the name of that entity to whom that money is due. So that becomes your capital expense. Next part we need to understand is the revenue expenditure. Now, just like we have the expenditure on assets, which is for the longer duration, we have to spend money on a regular day-to-day business operations, and this is what brings us to revenue expenditure. This expenditure is something which is done for the purpose of our day-to-day activities of business. Simple examples: salary, wages, electricity, telephone charges, conveyance, traveling expenses, and so on. So if I have spent money on paying off my employee's salary for that month, can I make that employee work for the next 10 years with that 1 month salary or 1 year salary? No, no employee is going to be with you. They'll run away, right? They'll say this person has gone mad and they're asking us to work for the upcoming years also by paying us salary for this 1 year. So this makes it clear to us that if I'm spending on regular day-to-day expenditure, this expenditure is going to give me benefits only for a short duration. And so when the expenditure is giving the business benefits for a short duration, it will be considered as a revenue expenditure. As I gave you all these examples: salary, wages, conveyance, transport, it could be advertisement, and so on, right? And another important thing is this is not considered as asset, it is written as an expenditure, as it is giving me the benefit only for a short duration. And what is this short duration? That short duration is just 1 year's time. Fine. Coming to the journal entry. Now, in the journal, how do you write? We have practiced that a lot when we did the part of journal. So, I'm sure by now you know how to write the expenditure, right? So, expenditures, what they are? They're always debit. So, debit all expenditures, whatever expense it is: salary, wages, electricity, telephone charges, you're going to write a debit. And what is going to be credit? How are you making the payment? It could be cash or bank. And if you didn't pay, what do you write? You write the name of that entity. Correct? So this is clear. Capital expenditure is long duration. It is the expenditure on assets, and revenue expenditure is short duration, and it is the regular day-to-day business expenditure. Fine. Now coming to the basic understanding. So when you show the asset purchase, it is not deducted from the income for calculation of profits. So if you earned, let's say, a sales revenue in the year, and you say that, okay, these are purchases, this is transport, salary, advertisement, etc., whatever is paid for that purpose of the sales, what do you do? How do you find the profit? You take sales and you reduce all the expenditures and then arrive at the profit. Now, will you also reduce machinery from this in the same year? The answer is no. So this is the correct. How do we show that in the correct way, right? How to find the correct profits? If I don't consider the asset at all, that means machinery I have purchased, but I don't consider the expenditure of that machinery at all for the upcoming 10 years, will that be right? The answer to that is again no. If I have bought machinery, if I have bought furniture, the obvious answer to this is that this is going to give me benefits over a few years duration, whatever that time period is. So I have to spread this expense in that time period. I cannot have just 1 year of machinery expenditure shown entirely in that year. It will be wrong because it's not giving me benefits only for 1 year. It is giving me benefits for 10 years or 5 years or whatever it is. So I have to spread this expense for that duration, correct? So this is how I will be able to find out the correct amount of profits. So let's take an example. If I buy a laptop for an amount of 50,000, it is going to give, let's say that laptop has a life of 5 years. So if it is giving me the benefit for 1 year, how much will that benefit be? It will be equivalent to 10,000 per annum, isn't it? So if the laptop is 50,000, its life is for 5 years. Every year, how much is the usage of that laptop? It is going to be 10,000 per year, right? 50,000 divided by 5, 10,000 per year will be the usage cost of that particular laptop. So what do I do then? If you earn an income, you need to deduct this usage charge every year to get the correct value of profits. Have you understood this? So what you're doing, you're taking the income of that particular year and saying, okay, for this income to be earned, I used my laptop to the extent of 10,000. Got it? So this is the correct way of showing your profits. If I don't consider 10,000, at the end of 5 years, what is the laptop? It's going to be waste. It's going to be useless because I have to buy a new laptop. Obsolete it's become, or it's outdated, it has stopped working. So after 5 years, what happens then? 50,000 has gone. But I didn't consider that as expenditure. I did not recover that money from my business incomes. Will that be correct? No. My business should recover this 50,000 also. Not just regular expense, it has to recover this 50,000 also, but not in 1 year's duration, in the duration of 5 years. So this brings us to the concept of how depreciation works. This is exactly the way in which we have depreciation working. So we need to consider every year this spread out amount of the asset in calculation of our profits. So coming to, you can say, the definition of depreciation, that is a traditional way of how people speak about depreciation. That is, depreciation is the shrinkage in the value of the asset, or it's the reduction in the value of the asset caused due to wear and tear, passage of time, or its obsolescence, right? So it becomes obsolete. So basically, the asset has some wear and tear, it is used up, or there is some duration of time for which it is used, and after a certain duration of time, it becomes obsolete, right? So that asset is the basic, you can say, asset is considered, and the shrinkage in value, the reduction in the value is also considered. Now, what is out of these two? We have the shrinkage in the value equivalent to what we call as depreciation. So reduction, again, let's revise it quickly. It is reduction in the value of the asset, and this reduction is due to wear and tear, correct? And secondly, it is also due to passage of time. So even if I buy a car today and keep it in front of my house for the next 5 years, will a person after I'm not going to use it, right? But after 5 years, a person comes to me to buy the car. Will he pay me the same value of the car for which I bought it? No, not at all. He will say, you bought it 5 years back, and now, even if you haven't used, I'm going to pay you less. Because with the passage of time, that car has become an old car and I will pay you less value. So this is exactly what we are talking about, is the depreciation or the reduction in the value of that asset. Now, why do we need depreciation? Is it necessary? Answer is yes. Main reasons for the charge of depreciation. One thing is to calculate the correct amount of profits. If I don't take into consideration depreciation or reduction in value of asset, profits is going to show an upward picture, extra profits, because we don't consider the cost of the asset every year that is used up, so that usage is not considered, and so my upward trend of profits will be seen, or my profits will be excess. Actually, every year I have to charge that amount of depreciation, and then only my profits will be correct. Second important use of depreciation is to show the correct and the true value of your asset in that time period or that date. So suppose I am buying the car today, and after a year I have to sell it. In my books of accounts, I cannot show the same value of the car. So if I bought the car for 20 lakhs, can I keep showing the car for 20 lakhs over a period of 5 years time period? The answer is no. After 1 year, the car value has reduced. So I have to show the correct value. So if a person in front has come to me and he sees my balance sheet, he should see the correct value of the car. So suppose now the value of the car is 17 lakhs. I cannot keep showing it as 20 lakhs. I have to show it as 17 lakhs. So that is where the concept of depreciation is considered, where I show the correct value of my asset in the books of accounts with the help of the charge of depreciation. So hope these two things are clear. One is to calculate the correct value of profits, and second is to show your assets in the correct way. The value is also shown correctly. Now, what factors are used to determine the depreciation? How do you calculate depreciation? Is depreciation calculated like, I feel that the value is reduced to such and such extent, and so I just charge whatever depreciation comes to my mind? No, you can't do it, because tomorrow you'll say the entire value of that asset is depreciation. I don't like the asset anymore, so it is fully depreciated. No. Accounts has a standardized way of determining depreciation. What do they take into consideration? One is they consider the basic cost of the asset. When you bought that asset, that cost of the asset is considered, that you show in your books of accounts. Secondly, what is the lifespan of that asset? Is the life of that asset 5 years, 10 years, 20 years, 2 years, whatever? So the lifespan of the asset over which we need to keep showing the reduction in the value of the asset. And finally, what is the terminal value of the assets? So these three terms we are going to understand in detail one by one. Let's take the first one. Cost of the asset. What does it include? See, we remember the cost concept of accounting. Cost concept of accounting spoke about one important thing, is that till the asset is put to use, whatever amounts have been incurred on that asset will be considered as the cost of the asset. Like suppose you buy a machinery. Machinery is of 10 lakh rupees. Then that machinery cannot be kept in that warehouse only and say, okay, I will use it there and then. No, it has to be brought to your factory. So when you buy the machinery and you bring it to your factory, there is some transport cost that gets added to the cost of the asset. When the asset comes into your, let's say, industry or factory or warehouse or godown or whatever, it has to be installed, right? So you have to fix the screws, you have to join in the parts, maybe you have to make some connections to whatever equipments you have. And when it is connected fully, that installation is done completely, only then it starts working, isn't it? So installation is also a part of the cost of the asset. Then you may have paid some brokerage, commission, loading, unloading charges, and such other charges which are relevant and related to the cost of that, or rather the bringing of that asset into your company, your organization, and putting it to use, right? Any consultancy is paid. So it could be engineering consultancies, how to operate the machine. The engineer charged you 50,000 rupees for showing you how to operate the machine accurately, correctly to get the best results. So that 50,000 is also a part of the cost of the asset. So first important thing, whenever you write the amount or the asset value in your books of accounts, that cost of the asset is determined, you can say, considering all these inclusions. Another important thing is, suppose you bought the asset. Let's say you bought a building, and after you buy the building, you start using it for your office. Then you find out that, okay, after 2 years now, I need to really renovate this building completely to give it a better look, so that more people come to my office. Or maybe the employees find it more comfortable sitting in the office. You have installation of centralized AC, you have painting work done, you have interior decoration done. All this is a major expenditure on that asset. Whenever there is a major expenditure on the asset, that also gets added to the cost of the asset. Suppose I just have one room painted. That is not the bigger value, right? Bigger amount on the asset. If one room is painted, it can amount to an short-term expense, revenue expense as repairs and maintenance. But if value of the asset is, let's say, 50 lakhs, and I spent another 25 lakhs on repairs, renovations, and all such things, then that 25 lakhs will be added to the cost of the asset. So this is very important when we calculate the depreciation. Next important thing is life of the asset. Life of the asset is basically considered in terms of your working life of the asset. How many years does the asset last? Right? And when the asset is in your business, can it give you the benefits of its operations? So if I have a laptop, does it work for that 5 years duration, which is the life of the asset? Does it work for only 3 years? That is important. If machinery is bought, how many years will the machine work? A generalized understanding. When you buy a refrigerator at home also, they give you a warranty card, isn't it? Why this warranty card and guarantee card is given? It's basically to say that within that time duration, if anything goes wrong, you can get a replacement, or they will come and repair it at your house, isn't it? So this is where they're talking about, you can say, a warranty period in comparison to the total life of the asset. In that warranty period, you get benefits, extended amounts. Let's say, even if they are giving you a warranty of 1 year, it's not necessary that the life of the asset is 1 year. The refrigerator could be, based on your usage, lasting with you for the next 5 years. So life of that asset is, let's say, 5 years. So working life of the asset is considered on an average. What standards are fixed for an asset, that is considered. Maybe the standard life of a laptop is 3 years, but if I use it less, or if I use it based on, you can say, a better technique, I use it very nicely, then maybe that laptop could last me for 8 years also. Got it? And I don't feel that any upgradation is required, so I may use it for 8 years. But standard life of the laptop is, let's say, 3 years. So life of that laptop will be considered to be 3 years and not 8 years. So this is how a life is determined. Next is the terminal value of asset, or what we also call as scrap value. Now, suppose you often find that many times during festive periods, you have a cleanup of your home and you say, okay, this is not required, that is not required. What do? You accumulate all the things together and you sell it off. What is that sell off? It's basically scrap sale. So ये नहीं लग रहा है, वो नहीं लग रहा है, and I just sell it off. So that sale, that value which the asset gives you, that is called as a scrap value. So if you have an old microwave oven and you just give it off because it's become too old now and nobody's going to buy it in second hand market also, you just give it to a trader and say, okay, scrap it off and use it off. And he gives you 1,000 rupees or 500 rupees. That 500 or that 1,000 becomes the scrap value of that oven, right? And that oven is basically telling you, okay, when you buy the oven, you may have a standard understanding that if I use this oven for the next 5 years, then at the end of the fifth year, I will get just 500 or I may get just 1,000 in value. So this is basically at the end of the life of the asset, what will the asset give you? It is not in between. At the end of the asset, that means you've used it completely, right? And then you are selling it. That time, what will be the terminal value of the asset? That is called as the scrap value of the asset. Now comes the important part, that is methods of depreciation. Now, methods of depreciation standard used are only two methods. One is called as the straight line method of depreciation, and second one that we have is the written down value method of depreciation. Now, straight line method is also called as installment method, and written down value method, they may also call it as reducing balance method. Okay. So let's see these methods now. Straight line method. Straight line method, let's understand it with the example again. We have a car, and for this car, how do I calculate the depreciation of this asset? We take the original value of that asset minus the scrap value. What was the scrap value? The terminal value. So if this car is used up for maybe 10, 15 years, entire life of that car, and it is scrapped, how much can it give you? And divide this entire thing by the life of the asset in terms of years. So original cost minus scrap value, and this entire thing divided by the number of years or the life of the asset. Straight line method, we take an example in numbers now. If the car value is 30 lakhs and at the end, let's say the scrap value comes to 3 lakhs after 10 years. So 10 years is the life of the car. So how do you calculate the depreciation? We say 30 lakhs minus 3 lakhs divided by 10, and this gives me 2,70,000 per year. So why am I taking this scrap value into consideration? Now understand this a little bit in terms of the concept. See, I am using depreciation for what purpose? For recovery of my value of the car. So if I have to keep aside money every year, should I keep 30 lakhs divided by 10 or should I keep 27 lakhs divided by 10 aside? If you are making a very correct calculation, you will say, okay, I will recover 3 lakhs at the end of the 10th year by selling the old car. So I don't need to keep 3 lakhs aside. As it is, that time I will get 3 lakhs. So how much do I have to keep aside now every year? I have to keep aside 27 lakhs divided by 10, right? I will not keep 3 lakhs, I will keep 2,70,000 every year, so that by the end of the 10th year, I have 27 lakhs accumulated, kept aside. And when I sell the car, I get 3 lakhs in terms of scrap. Correct? So total comes to 30 lakhs, and yes, with that 30 lakhs, I can go and now buy the new car. So this is how the depreciation will be used. There is a second method which is called as written down value method or reducing value method. So reducing value method or written down value method, how is it taken into consideration? Again, if we have a car, every year a fixed rate of depreciation is applied on this cost. So the car value was how much? 30 lakhs. I have to consider a rate of depreciation, and every year on the reduced value of that car, I am going to charge that rate of depreciation. Now let's see the example. So if it is a written down, car was bought at 30 lakhs. I say I depreciate the car at 10% per annum. So how do I calculate? Look at the example. First thing you are using is the car basic cost, which is 30 lakhs. Now, against this 30 lakhs, I'm charging a depreciation of 10%. 3 lakhs is the value of the car that is reduced in the first year. So, written down value at the year end. Written down value means after reducing your depreciation, what is the value that remains? That is 27 lakhs. Now, next year, second year, when I'm bringing forward the value of the asset, it is not 30 lakhs now. It is how much? 27 lakhs. So, second year, you will reduce the car value by again 10%. Okay, so rate of depreciation is fixed. Amount of depreciation will will be different in the written down value method. So second year again I'm charging 10%, but not on 30 lakhs now. On what value? On 27 lakhs. So on 27 lakhs, 2,70,000 will be the depreciation and written down value will be the amount of 24 lakhs 30,000. Third year, again I'm bringing forward the written down value of the car, which now becomes 24 lakhs 30,000. So at the end of the third year, you are going to again charge 10% depreciation, 2 lakhs 43,000, and written down value at the year end will be 21 lakhs 87,000. So if I ask you at the year end 3, come on, tell me what is the value of your car now as on date. You will say the car value as per the depreciated written down value method will be 21 lakhs 87,000. So this is how WDV method or written down value method is used. So hope this is clear. Like if we take into consideration a comparative study now of these two methods, you will see that in these two methods, first of all, we have charged on what value are we charging? Its straight line is on the original cost, isn't it? 30 lakhs minus the scrap value divided by the number of years. So original cost is considered and every year on that same value, we are calculating the depreciation. Whereas if we are talking of written down value method, what is happening? The reduced value, every year there is a reduction in the value of that asset, and on that reduced value, you are charging again the depreciation. Correct? Asset value can be reduced to zero in the straight line method. So every year if I'm charging 27 lakhs, 27 lakhs, 27 lakhs, what will happen? At the end of the 10th year, it will be 3 lakhs, which is equivalent to the scrap value. Suppose there was no scrap value at all, 30 lakhs divided by 10. So every year 3 lakhs, 3 lakhs, 3 lakhs. At the end of the 10th year, the asset value will be zero. But will this happen in the written down value method? You can check yourself, try and do it for 10 years, 20 years, whatever. There will be some value of the asset. You will keep reducing the value, but there will be some value in that asset. It will never become zero. Correct? What will be the value of the depreciation? Straight line method, same every year. 2,70,000, 2,70,000. Every year you're charging the same amount of depreciation. Is this the same in case of written down value? See here. Every year, is it same? No. First year it was 3 lakhs, second year it is 2 lakhs 70, third year it is 2 lakh 43,000, isn't it? So every year you will have a change in the amount of depreciation. Percentage will remain same, but value, the amount of depreciation will change. And finally, we come to the last point, which is it recognized by law? So if tomorrow you have to write your books of accounts, which method will be acceptable by, let's say, the Income Tax Act? So you want to show your correct profits to the government and say, okay, I want to pay the tax on my profits. Which will be the acceptable method of depreciation? The answer is straight line method is not acceptable, whereas written down value method is the acceptable method of depreciation. Fine. So if you are writing the books of accounts and in the practical cases in India, the acceptable method of depreciation currently is the written down value method. So try and solve this as examples so that you have a little bit of practice on a depreciation. You once you understand the concept, it's not very difficult. You can just go through this video again in case you have some difficulty, and see that the examples which we have solved here, it's quite simple to calculate the depreciation. Now, more such examples, more such detailed, you can say, journal entries and how you write the depreciation, how you show the depreciation in your profit and loss and other places in case of drafting the final accounts. We are going to do it when we show, or when we are actually making or preparing the final accounts, that is the trading profit and loss and balance sheet. So in the further videos, we are going to learn to prepare the final accounts in depth. So stay tuned to this channel so that you get more updates on the upcoming basics of accounting series. And also in between, I'll be uploading different videos on various important topics that are coming up in the commerce area. So hope you have understood the concept of depreciation today, and it will be useful for you to solve your different examples that you have in your standard 11. Also, people who want to clear, also you can share this video to your friends and those who wish to learn accounting in depth. So this is like going to act as your foundation stone for the further advanced learnings that we're going to do. So if you find this video useful, do like it and also share it with your friends and other people so that they can also learn and upgrade their knowledge of commerce. At the same time, we'll be continuing with this series of basics of accounting ahead. We are going to learn the final account. So stay tuned to this channel. And if you have any questions, you can put them in the comments so I can also make videos on those topics. So hope to see you in the next video of Commerce GYAN. Thank you.